Fed Chair Jay Powell says issues in commercial real estate are manageable, while Treasury Secretary Janet Yellen recently said she doesn't expect commercial real estate to cause systemic risk to the banking system. Joining us now with his take, Richard LeFrak, CEO of real estate giant, the LeFrak organization. I don't use that term loosely. Not many people have a city named after him, Richard. You know, like LeFrak City.
Well, it's very kind, Joe, to be so generous with your appraisal of my value.
Well, you got. I mean, if I absolutely need an apartment, I think I could probably come to you, and I could find one in New York City.
It's true. By the way, you know, before we start, I want to just say one thing, if that's okay. That I was listening to your guests about, you know, the inflation stuff, and maybe this is a headline before it hits the paper, but I've noticed in the last 3 weeks that apartment rents are starting to firm up again.
Really? So that's we can talk residential or we can talk commercial, but you know both, obviously. And how do you account for that, Richard? If
everybody's working.
Everybody's working. And then
working.
Why is everybody working when they've gone up 500 basis points? It's all a very hard thing to sort of figure out, isn't it?
And we have a real estate crisis in the midst of an economic boom. Doesn't make any sense.
Very strange. History only rhymes. So tell me about commercial real estate. That's what we want to talk about, though. Tell me all about New York City commercial real estate and where we are.
Well, you know, of course, everybody knows we've had this sea change in terms of occupancy. You know, work from home, all the pandemic derivative problems have come home to roost. And in addition, this abrupt increase in interest rates, which is really unprecedented, other than 1981, 82, when Volcker was fighting inflation, just turned the whole industry on its ear. And right now, we're in a kind of unvirtuous cycle because nobody knows what anything is worth. And because they don't know what it's worth, it's hard to get any kind of financing, which is really the oxygen of the business. You know, commercial real estate lives on debt. And, you know, if debt is unavailable, it's just a complete, you know, guess as to what these buildings are worth and what the value is.
Is it a long-term sea change post-pandemic, Richard?
Well, you have had many visitors who come on the show and talked about, you know, work from home and how long it's going to take to kind of sort out who's coming to the office and when they're coming. There's definitely been an improvement in attendance in office, you know, in office attendance by employees and everything. But now AI is on the scene, and, you know, then you hear numbers such as 20-30% of the white-collar jobs are going to be eliminated. So when you get all finished with it, it's just a big, vague bunch of facts. And the only real fact that's hard today is that there's no money available, really. There's no liquidity in the business, and that there's going to be severe losses suffered by equity owners and also some financial institutions.
We've talked about, you mentioned that you're seeing it firsthand, that, you know, the last point to 2% for the Fed might be difficult given what you're describing right now. Were there a lot of, what's that expression, pretend and, you know, and extend and all those things? There's a lot of that we know goes on, and if anybody was waiting for rate relief near term, they might have to put that off a little. Why have we avoided even more trouble in commercial real estate, and are we going to be able to avoid it if rates start climbing again?
Joe, well, first of all, there was something called, I would call a crack in the real estate business, which was low interest rates. And, you know, that a lot of those loans are starting to roll off now. And so people got by because they were borrowing money at 3-4%. That same money is going to cost 7 or 8% today, or even more. And so the reality of the problem is going to kind of be more obvious. And I think that part of that is, you know, you saw Janet Yellen You saw the head of the Federal Reserve both speak to commercial real estate problems in the last week or two.
Right. So at this point, what's looming ahead? Are we looking at like just the tip of an iceberg? I've got a lot of metaphors here, Richard, but is that how you see it, or will time take care of things?
I was going to actually start this whole discussion with the GoFundMe page that I need for my business. No, I mean, yes, we're going to see more and more problems emerge in the next 12 to 24 months. And if you look back in history at the financial crisis, which was the last big mess in real estate, it took 3 to 5 years to kind of work through all the problems. So I don't think there's a magic bullet. I don't think that lowering interest rates 50 or 75 basis points is going to make that much of a difference. You know, I think this has to work its way through the system, and there's going to be winners. It's going to be losers.
Richard, I think one of the questions that people have is this like a slow rolling situation that hurts but doesn't kill? Or is it the kind of thing that could be both slow rolling but reach some kind of terrible inflection point where confidence, completely and utterly rushes out of the system for some period of time that really is painful?
Well, I think it's both right now. I think you described perfectly the two dynamics that are happening. People have lost confidence, and that's why there's no liquidity and no transactions occurring. Even the stress funds have not been that active yet because they don't know what anything is worth. But at the same time, this is not going to be a moment in time where everything blows up. It's just going to be kind of a dull pain that continues in the system until it sorts its way out. And you're going to be talking about this in a year or 2 years too. It's not going to change unless magic interest rates return to 3% and everybody comes back to work 5 days a week.